Good morning from our global headquarters in New York. I'm Menace Crenny. Danny Berger is on assignment. Welcome to Bloomberg Brief. Let's set your agenda. Loyalty First defines the surprise nominations. President-elect chooses Matt Gaetz and former Democrat Tulsi Gabbard to serve in his next cabinet. Next move, the approvals. It's a lock. The GOP takes the trifecta in Washington as John Thune is elected to Senate Majority Leader. Uncertainty in the Fed. Several officials reiterate concerns over how far the central bank will need to lower interest rates and urge caution on the cuts. We flip to green as Washington flips to red. There you go. S&P 500 eking out the tiniest of green on your screen. NASDAQ slips this morning down 7 pips at 21,151. I mean, what you've got here is uncertainty. You have a trifecta in Washington, an 80% probability of a December rate cut. And you have Barclays favoring the U.S. growth stocks and big tech strength. But the Philly semiconductors dropped by 2% yesterday, fourth decline in a row. Roll it over and you will have a look at what this bond market has done since the election. The 2s are up 13 basis points. The 10s are up 20 basis points. You have an 80% lock post the CPI, the core CPI yesterday. So we're up 1 basis point on 10s this morning. Kashkari has the confidence that we are not in stagflation. HSBC, by the way, Stephen Major, short-term bullish on treasuries. Reversal of the rally looks overdone. The summer rally looks overdone. And he's raising his floor on treasuries to 3.5% from 3%. The risk is rate hikes in 2025. Go figure. Roll it over. Have a look at Bitcoin. Why not? I mean, it is just stratospheric through the past 24 hours. We made it up to $93,000. We've come back ever so slightly. We're at 91,000 and change. If there is a strategic reserve, $500,000 is eminently possible, according to Mike Novogratz. He wouldn't cry over that. My guest this morning is Tim Graf, head of EMEA macro strategy over at State Street. And he writes this: we do not see excessive positioning, limiting the moves for a higher dollar. Rates, strong dollar as such, given the macro backdrop, we see these moves extend. He joins me now. Good morning, Mr. Graf. There's no sign of irrational exuberance, but are you prepared? Do you think we should be prepared to add to our positions across those pro-Trump risk trades?
Morning, Menace. I think some of them, sure. I think we are in overbought territory in a lot of things. You mentioned Bitcoin. That certainly fits the bill. The dollar probably for the short run. But I think after some consolidation in the dollar and rates, yes, I think the fundamental backdrop, and as you mentioned, positioning, we look at the positions of institutional investors in currencies across the board, and in the dollar, they are overweight, but that overweight is nowhere near as extreme as we've seen in previous dollar rallies. And I'd argue the fundamental backdrop for further dollar rallies is every bit as strong now as it was in, say, 2022, during COVID, during 2015, when you consider the policies that are likely on offer from the Trump administration, and particularly how inflation expectations may need to reprice a little further, rates may need to reprice a little further, and that divergence between the U.S. and other economies comes to the fore yet again. I think that argues for the dollar higher over the longer term.
So what's the lowest hanging fruit? I mean, we just had a trifecta in Washington. It's a razor-thin majority, but it is a majority nonetheless, and it is control. Does that embolden the long dollar? Kit Jukes was with me the other day. He said it runs out of breath at Christmas.
Yeah, I think it does embolden it. And you never really want to fade momentum in Q4, I don't think, and momentum is pretty strong. It emboldens them legislatively. Will they get everything that is kind of projected across? I doubt it. As you mentioned, these are thin majorities. I think particularly some of the cabinet appointments that have been announced over the last 24 hours may run into some difficulties. That has very little to do with economics, but I think it speaks to the notion that this probably won't be a carte blanche type of administration where they get every single thing they want. There will be compromises. They have talked about, cutting spending and reining in deficits. So they need to balance one of the, they need to balance those two factors. It can't just all be about spending and cutting taxes.
Listen, I think I'm the only person that's sort of wandering around talking about maybe they'll be fiscally a little bit more responsible than everybody thinks out there when you listen to the narrative from Scott Bessent. But I'm a lonely person in a field. Tell me this, the bond market, 2's up 13 basis points since the election, 10's up 20 basis points. I put it to you, this is just moderate bearishness and not even a sign of vigilantism.
No, I think it's a repricing of inflation expectations primarily. You've seen a big move. If you look at something like five-year forward inflation swaps in U.S. rates, they've moved up considerably the last 6 weeks, and the nominal rates market has to account for that. I think you get problems in rate markets if that starts to really de-anchor. We're not far away from the highs of inflation expectations by that measure, as we saw during COVID. We're 15, 20 basis points away from that. If that does prove a disorderly move higher, then I think you have real problems in the rate complex where it may see long end rates especially push a lot higher. We're not there yet. The labor market data is softening. Inflation, as we saw yesterday, is at least coming from sectors the Fed's willing to look through for the time being, and expectations have sort of topped out. But it's certainly the risk for the long run.
Look, you're looking at these five-year inflation swaps, and you are raising that this could be the alarm bell. What does de-anchoring look like? I mean, what is de-anchoring to the point, Tim, that could cause an extended pause, if not even a hike, 2025?
Yeah, it's a really good question. I think de-anchoring consists of, I think the high on that index over the last 5 years has been something like, let's call it 2.8%. If you get through that level with a pretty sharp move and then it sits there or even continues to rise higher, I think that's your first sign that there is some de-anchoring at play. I think that will absolutely get the Fed's attention. For now, they can probably relax that it's so far been just a repricing of expectations and you haven't broken kind of a new high range. But if you do, and if you even start to see the signs of it, or if you get a sharp move towards that, they will have to take notice. And I don't know if it necessarily means hikes quite yet, but it means the plans to ease probably go off the table at some point in Q1 next year.
I'm looking at Stephen Major's note from this morning. It's not to pit HSBC to State Street, but it's interesting. Stephen is an Uber bull. We know that. He's raised his floor to 3.5% from 3%. He talks about the possibility of hikes in 2025. And this is perhaps the tail risk for all risk in the markets, isn't it, of that hike in 2025?
Yeah, I think so. I think that takes a lot of the positivity in risky assets in particular off the table, if that's the case. And especially if it's a hike because of de-anchored inflation expectations or higher actual inflation. If it's a hike because U.S. growth or U.S. productivity continue to fly, as they have done, defying expectations the last year or two, that's not going to be great for rates, but that's also probably not going to be bad for risky assets. You get into that kind of negative correlation between bonds and equities that we've been seeing a bit more frequently lately. But if it's inflation driving that, and inflation expectations especially driving that, that is a real problem, I think, for the panel of risky assets that we've seen rally recently.
Tim, does it matter to you the choreography of what Trump 2, the administration, goes for first? They now have control of the House, they have control of the Senate, and they're in the Oval Office. For the theater of what comes, whether it's the alpha of tax policy in the very first 100 days or an alpha of tariffs, because they are two very different things with two very different risk narratives.
Yeah, I would say it does affect my thinking in that I think tariffs are the avenue that they can go down more unilaterally, and they can kind of do it by fiat to a degree. So I think that's probably the front and center concern, and it has the potential to de-anchor inflation expectations. Even if it is potentially a one-off shock to prices, it has that potential to raise inflation expectations. More so, it worries me more so than tax policy, which is going to require a process with Congress, and as we talked about before, might run into some negotiation and consolidation of expectations. So I think the sequencing of it, you're right, it is important, and that's why I think tariffs come probably first, and I can't read their minds, but I would guess is probably on the agenda first, because it's that much more unilateral in possibility.
And it makes great headlines, doesn't it? And we know every administration, red or blue, loves a headline. Tim, thank you very much. Tim Graf, setting the agenda for risk. There are other stories trending on your Bloomberg terminal this morning. This is what I got for you. Burberry shares are rallying after it delivered a sales beat. Analysts were particularly positive on the new CEO's strategy, which includes a return to its roots as a maker of, you got it, the trench coats and the scarves. LVMH appointed new divisional leaders, including the return of the CEO Bernard Arnault's son to the Paris headquarters. Alexandre Arnault will serve as the deputy chief of the company's wines and spirits division, leaving his New York-based position at Tiffany's. The reshuffle is fueling succession talk. The U.S. Justice Department is investigating crypto predictions betting platform Polymarket for allegedly accepting trades from U.S.-based users. That's according to a person familiar with the matter. Polymarket says the FBI agent seized its CEO's phone and electronics. Coming up, Gates and Gabbard will bring you the very latest on President-elect's cabinet and an update on Congress. A little bit later this hour, we catch up with JPMorgan's Priya Misra. She will join me around the desk on why rates' reaction to Trump's win is different this time to 2016. Good morning from New York. It is Bloomberg Brief. I'm Menace Cranny here in New York. President-elect Donald Trump shocked Washington with his decision to nominate loyalist Matt Gaetz as his Attorney General. Trump also picked the former Democrat Tulsi Gabbard as Director of National Intelligence. Former House Speaker Kevin McCarthy, who was toppled by Gaetz last year in a rebellion by the ultra-conservatives in the GOP, told Bloomberg that Gaetz won't get confirmed by Congress.
These are very good except one. Look, Gaetz won't get confirmed. Everybody knows that. It's a good.
How are you reading
It's a good deflection from others, but Gaetz couldn't win in a Republican conference, so.
Well, let's be frank, Kevin McCarthy has beef here. Joining me now is our chief political correspondent, Anne-Marie Horder. Anne-Marie, good to see you. Look, there's been, yesterday was a deluge of, depending which channel you tuned into, about Matt Gaetz, obviously under investigation by the House Ethics Committee. McCarthy has beef. What's the reality of this kite?
So he is under investigation. In September, the House Ethics Committee did something that they normally don't do. Just give us a little bit of insight of what actually he was under investigation for: illicit drug use, sexual misconduct, sought to obstruct government investigations of his conduct. Now, everyone's going to focus on the fact that Donald Trump is nominating the congressman from Florida, Matt Gaetz, to be his attorney general,
yes.
Which the senators yesterday, someone like Susan Collins of Maine, talking about the fact that she was shocked by this announcement. What we should be talking about this morning is that Matt Gaetz resigned yesterday. And then Jake Sherman of Punchbowl News came out with reporting that the reason why potentially he resigned is because this week the House Ethics Committee was going to vote on making public this, what they're calling highly damaging report. Once you resign from Congress, that report likely will get buried. Potentially, it could still be made public, but that would mean that a Republican would also have to vote on the committee with the Democrats to release that. And that's not going to look good, and that's going to create a lot of drama for someone like Speaker Johnson. Now, think about this. The House Ethics Committee has all of that content and material. So when Speaker McCarthy comes on and says no one thinks he can get confirmed, that's the reason why, not just because the two have beef.
Okay, I mean, our headline is obviously the Republicans take a trifecta. Now, this is a very different regime, isn't it? Matt McConnell is no longer the Senate Majority Leader. Paul Ryan's no longer there. So this is a very different complexion trifecta to 2016.
And with the Matt Gaetz resignation, with the fact that Congressman Walt of Florida has been picked to also be Donald Trump's national security advisor, and the fact that Elise Stefanik of New York is going to go over to the UN, this means that Speaker Johnson, even though he has this majority, and we still don't know how slim that majority is going to be, it's projected the 218, but how much of a buffer of the seats he's going to have, his first order of business is going to be having to make sure he can keep that majority because they need to fill those 3 seats they're about to lose. But
then that's got big consequences in terms of just how aggressive the political agenda can be, whether it's on tax, whether it's on immigration, and that's the key issue, isn't it?
Absolutely. On tax and fiscal issues, they can go through this process of reconciliation because they have that majority in the Senate as well. Other issues where you're going to need 60 votes in the Senate to get through, and you have this new Senate Majority Leader, John Thune, in really really the ethos of Mitch McConnell. He was his number 2. You're not going to have something like the filibuster be blown up. So they're going to have to get to 60 votes. So not everything they want on the wish list is going to get done. The most likely outcome could be on the fiscal side. So that's we're talking about things like tax cuts.
How much of a rub do you think to Trump was it from the Senate that they went for John Thune rather than Rick Scott? Rick Scott was, we understand, the primary sort of backing and choice of Trump. Do you think this is slightly one in your eye?
So all the accolades around Trump, Elon Musk, they've all come out, the MAGA wing of the party going for Rick Scott.
Yeah.
Trump didn't exactly endorse anyone. And we heard from Jessica Taylor of the Cook Political Report yesterday. She said Trump doesn't like to be seen as picking losers. It was very obvious that Rick Scott, this was going to be an uphill battle for him to get. And what Thune is going to be is he's going to be almost a guardrail of anything Trump tries to push through. This is someone who's an institutionalist. He is really this idea of the man of the Senate. And in 2022, when he was up for re-election, Trump wanted to primary him and said he was a Republican in name only. So there has been some friction between these two men, and he is now the Senate Majority Leader.
But as you said, potentially that's some kind of a guardrail and leaves Trump with slightly hands-off from the Senate. Anne-Marie, good to see you this morning. Good luck on surveillance. You can catch Anne-Marie over the next 3 hours, 6 a.m. to 9 a.m. with the surveillance team. Our chief political correspondent. Coming up on the show here, ASML. It upholds its bullish outlook for 2030. What does that say about AI demand? I'll tell you in just a moment. Bloomberg Brief and Menace Crenny in New York. Front pages for you. This is what we've got making news headlines around the world. First up, the New York Times. Trump and Biden make nice at the White House for at least 29 seconds. Biden welcomed Trump back to the White House before the two held a behind-closed-doors meeting that lasted 2 hours. Trump skipped the tradition last time when he refused to concede the election. The imagery of the fire was pretty potent between the two of them yesterday evening. Next up, the Journal leads with Trump's transition co-chair makes a late play for Treasury Secretary. Cantor Fitzgerald's CEO, Howard Lutnick, has reportedly gone directly to Trump about becoming the Treasury Secretary. That's according to the Journal's sources. The move has become noticeable to Trump aides, as Lutnick hadn't directly advocated for the position until recently. In Bloomberg, we lead with ASML upholding the 2030 sales forecast in a bet on AI-driven demand. The stock rose on the upbeat outlook. The Dutch maker of the chip machines also plans to continue returning cash to shareholders. Let's get to Charlotte Hughes Morgan. She joins me now. Charlotte, look, this is a very different report to what we saw in October. The stock absolutely tanked then, down 16% on the day. Do we breathe a sigh of relief on the guidance?
Well, that's right, Manus. ASML held its Investor Day today, and it reaffirmed its 2030 sales outlook for between 44 billion euros and 60 billion euros. And it also pledged to return significant amounts of cash to shareholders via buybacks and dividends. And yeah, I mean, absolutely, this is a bullish signal to the market for the long term, right? I mean, last month, ASML third quarter orders came in far lower than expectations. They cut their 2025 guidance. So this is basically ASML saying, look, further down the line, things are a lot rosier.
We're getting ready for Trump Mark II. ASML has already felt the headwinds of restrictions in what they can do in China, but they still do business in China. How's that looking, and what are the headwinds there?
I think the China story remains to be seen. You know, there are obviously still export restrictions on ASML regarding, you know, exports to China. I think we'll have to wait and see with that one. But I think what ASML are saying here is they're really betting big on the long-term opportunity in AI, really. You know, in the statement, they say, look, demand for AI is going to stay really strong. We might see some market weakness, you know, in 2025. But look, 2030, 10 years down the line, AI is going to still be absolutely booming. The semiconductor industry is going to be really strong as well. You know, they forecast that global semiconductor sales are going to be over $1 trillion by 2030. And they're saying, look, we're well positioned to leverage our advantage in this space. You know, ASML are the only company that make these types of really advanced lithography machines that are needed by companies like TSMC to make the chips that are powering the AI boom. So, you know, from that perspective, ASML are saying, look, we are ready to capitalize on this, and our business is looking strong in the long term.
Charlotte, thank you very much. Bloomberg, Charlotte Hughes Morgan on ASML. We started the show with a little bit of bonds and equities, but crypto is perhaps the ground zero for Trump trades. We're flying higher this morning across the contributors to the Bitcoin rally. What you've got here is Bitcoin up just under 3% at 91,000. We did make it to 93,000 a little bit earlier on. And the view out there is, could they build a strategic reserve here in the United States of America, as was proffered on the campaign trail? That seems to be a little bit, the odds of that are low, according to Mike Novogratz, who, of course, would not be averse to that. The people that I talk to that trade meme stocks in whale size say what you've got here is a cycle in the cryptocurrency, which will come off the boil eventually, settle down, and then you will see a flood of money and profit-taking from crypto. That will drift into the meme stock world. You've got Doge up over 5 days, up by 80%. That's a meme coin, not the department. Coming up on the show, we're going to catch up with JPMorgan's Priya Misra on why the bond market's reaction to Trump's victory this time around is different to 2016. Context matters on Bloomberg. Global headquarters here in New York. A very good morning. You're welcome to Bloomberg Brief. Let's set that agenda. Loyalty first defines the surprise nominations. President-elect Trump chooses Matt Gaetz and former Democrat Tulsi Gabbard to serve in his cabinet. Next move, the confirmations. It's a lock. The GOP takes the trifecta in Washington. John Thune is elected Senate Majority Leader. Uncertainty in the Fed. Several officials reiterate their concerns over how far the central bank will need to lower rates and urge caution on the cuts. We flip to green. Have we still got it? 30 minutes later, we have. Equities flip to green as Washington flips to red. NVIDIA is up next week. That's your next hurdle. Never mind the election. NVIDIA is going to be the demonstration of real belief in these markets. Barclays say you still want to be long of growth and big tech. Semis dropped for the fourth day in the row yesterday, but we're hanging on by our fingernails, really, to this market. Despite that, have a look at the bond market. The bond market is so much more assured. And I just wonder, will Priya Misra be so assured that an 80% probability of a rate cut in December? Core and supercore CPI yesterday emboldened the drop in yields. We take one tick higher this morning. Kashkari with Bloomberg, yes, he's confident that we are not in stuckflation. Joining me now around the desk, it is Priya Misra, portfolio manager at JPMorgan Investment Management. Good morning. Good to see you.
Morning.
A plethora of risk-on assets, but I want to go straight to the bond market since the election day. Let's have a look at it. 10-year government bond yields have risen by nearly, well, it was 21 before I came on the telly, by 19-20 basis points. You would say this, that the bond vigilantes are not dead. We have weekly auctions to remind people of supply. Right now, bond vigilantes are offset by weaker hiring, Fed cut-focused investors, but that balance may not last for long. So, what drops first? How do we go out of balance, and how quickly do we go out of balance?
So I think that's the key question. It's going to hinge on a couple of things. How does the economy, ultimately the bond market, every market looks at fundamentals. How's the economy proceeding? I would say hiring is slowing down. We're still in a soft landing. Do we stay in a soft landing? So that balance starts to go away if it looks like we're actually re-accelerating. If you get, policies of significant fiscal stimulus, then I think that balance starts to change. Or does the economy actually continue to slow down? The Fed that's nervous about cutting too much, do they actually slow down that pace? So the balance can actually go both ways. The other one would be, what policies are we going to get on the supply front? I think there's a lot of optimism around significant fiscal easing. But look at what we've heard so far. Even on the campaign trail, both sides were actually talking about where do we cut. And we already have this between Elon Musk and Ramaswamy.
I'm glad you bring that up. It's not being talked enough about.
I think there's an expectation that there's just a little bit of waste that can be cut. you can't cut 2 trillion, which is the aim that they're talking about. If you're actually cutting 2 trillion and you're offsetting that by taxes, that's not significantly more supply. Now, we have to see exactly what DOGE or Department of Government Efficiency comes up with. Where are they cutting? Remember, a large part of the hiring has been government as well as state and local. If that starts to cut back, if the reduction in spending means less hiring, well, then we stay in balance because the Fed's going to continue to cut. So I think there's this tension right now. We're in a soft landing. The balance is there. Let's just see how the economy goes by and what are we seeing in terms of net fiscal stimulus, not just tax cuts.
And that's going to define supply in terms of bond supply.
Exactly.
And that is where you would say the vigilantes could be reawakened. But if there is more fiscal largesse, there is an inflation risk. And this is what I was talking to Tim Graf about a little bit earlier. There is an incremental rise in the 5-year break-evens. And this is where I'm seeing a divorce between what the Fed are telling me, that we're not in stagflation, that we're going back to target, and what the market thinks of where inflation is. And it's going higher.
Yeah, I'm glad you bring up inflation because, we look at what can happen out of this administration. The starting point is so different. You talked about debt, you talked about inflation. We go back to 2016, debt was less of an issue. We weren't really talking about the debt. Inflation was below target. Inflation now is above target. Now, you talk about the Fed. I think the Fed's looking at cumulative progress. CPI was 9%, it's 3%. We're not at 2. We're definitely not below 2. And I think the markets looked at the progress on inflation. The speed of that progress has gone down. You could actually argue in the last couple of months, there hasn't been much progress. Now, I think the Fed's still saying, well, we're not at 9 or 7 or 5%. But if that progress stalls and the break-even market is starting to sniff out, if you get tariffs, you get 60%. I'm actually looking much more at the rest of the world. If you get that 10 or 20% tariffs, that's absolutely inflation. It's a price level shock. And that's going to create stagflationary risk, which we heard from Chair Powell. They actually don't have a way to solve it. So I do think right now the Fed is looking at break-evens and saying, well, it's gone up a little bit, it's not concerning. I actually think much further increase there will stall how quickly the Fed's going to cut. And that balance you were talking about starts to shift. So it's both debt and inflation. And I think if the administration understands that we're in a different place, I don't think you get a lot of what's being talked about.
And this is the point that you make. It is not 2016. The capacity to take a huge amount of stimulus, a huge amount. And by the way, the Trump tax cuts are already in there. The impact of the corporate tax cuts, from 35 down to 21, 21 down to 15, or 21 to 20, it's not going to be the same alpha as you had in 2016. Put the context around what is it that constrains this market relative to 2016?
I would say it's debt and the focus on debt. The bond vigilantes in 2016, I think, were hiding in the woodwork because interest rates were 0, or the Fed had raised rates once.
Yeah.
So the debt concerns were much less, and I would say it's a global debt concern. We've gone through the UK. I mean, the emerging markets, I think, for a while have been debt-focused. Developed markets, we just lived through the Liz Truss moment in the UK. You're seeing nervousness around Germany. We've had the debt levels have significantly increased. So that's one constraint. Inflation expectations. I mean, 2016, there was no concern around inflation.
So with everything we've just talked about, my inbox is full of 5%, 5%, 5%. We're going to 5%. Stephen Major raises his floor from 3 to 3.5. He talks about the risk maybe even of rate hikes next year. Where do you see realistic? Do you see we break above 4.5, given the context of what we've just talked about? We need to know policy. I know that. But where is the skew? Is my risk reward a tail risk of 5% or 3.5%?
I really struggle with 5. And I struggle with the broader market being able to accept 5%. If you're getting a 5% in 10-year, well, where are corporate rates? So, I think then the corporate sector starts to struggle. Where's the housing market in that scenario? I don't think the economy is not interest rate sensitive anymore. The reason why the Fed's been cutting is they know monetary policy is restrictive. They just cut 50 basis points. They've cut overall 75 basis points. The 10-year's gone up about 100 basis points. So they know
that's not what they wanted, is it?
Exactly. And I think that's the question. Have financial conditions eased since the election? or tightened. Could actually, depending on what you look at, you could actually say it's tightened. For interest-sensitive sectors, it's tightened. So I would say risk assets will struggle with 5%. The economy starts to struggle. I don't think that's sustained. Can you get there in a knee-jerk market just gets there in a volatile way? Sure. I don't think it's sustained.
We've got a couple of quick things to get in. What is the flashing number in the bond market that restrains the fiscal largesse? What do you think?
You mean what's that level on the 10-year?
Yeah, what level on the 10-year?
Look at long end real rates. I think 2%, above 2% is a concern. 5% on the 10-year would be a concern. We saw it last year as well.
And let's just quickly close off. Investment grade and high yield. I mean, these spreads are tight. High yield is the tightest since 2007, the tightest in a century on investment grade. If there's still a wall of money comes into the dollar, can those spreads go tighter again?
Absolutely. They're tight. On a historical basis, they're tight for good reason. Look at corporate balance sheets. They're very healthy. Companies are not re-levering. Look at the earnings side. Well, in a soft landing, spreads are telling you that. Look at all-in yields. You're getting 6% in investment grade, 7-8% in high yield. I mean, think about where everything is so well valued. That's why we're continuing to see inflows into fixed income. I think it makes a lot of sense. And I think bonds as a hedge to risk assets is still alive. So I think fixed income, high-quality spread products still make sense.
Priya, thank you very much. That is Priya Misra of JPMorgan. Her view on the markets. We're all going to struggle at 5% coming up on the show. Gates and Gabbard will bring you the very latest on the President-elect Trump's cabinet and what Senator John Thun's leadership could mean for the Trump agenda on Bloomberg. Bloomberg Brief. I'm Menace Crenny here in New York. President-elect Donald Trump shocked Washington with his decision to nominate loyalist Matt Gaetz as his Attorney General. Trump also picked the former Democrat Tulsi Gabbard for Director of National Intelligence. Former House Speaker Kevin McCarthy, who was toppled by Gaetz last year in a rebellion by the ultra-conservatives in the GOP, spoke about the odds of a Gaetz confirmation.
I think choices are very good except one. Look, Gaetz won't get confirmed. Everybody knows that. It's a good.
How are you reading
It's a good deflection from others, but Gaetz couldn't win in a Republican conference, so.
Joining me now is Stephanie Baker. Stephanie, listening to McCarthy there, he's obviously got beef. He was toppled last year. Matt Gaetz, here's the issue. Will he get confirmed? And we're also understanding that he's still under investigation by the House Ethics Committee, and there's a report. Having resigned, will that report be released? And could that be the spoiler?
Well, Trump seems to be daring Republicans in Congress to defy him by holding up Gaetz's confirmation. But the Republican majority in the Senate is still relatively slim. I can think of a handful of Republican senators like Susan Collins of Maine or Lisa Murkowski of Alaska who might oppose Gaetz. As you mentioned, he had been under investigation by the House Ethics Committee after the Justice Department had investigated Gaetz over a sex trafficking case. It dropped that case, and then the House Ethics Committee started their investigation over allegations of sexual misconduct and illegal drug use. And it was due to vote tomorrow on the release of a report on Gaetz. And I think now there will be massive pressure to release that report, or perhaps for journalists to get their hands on that report. I think this is really a test of whether Republicans will allow Trump to make recess appointments. In other words, bypass the constitutional requirement to have the Senate go through
Stephanie, how bad a look would that be?
Confirmations.
How bad a look would that be, or would it just be get used to it, this is the way it's going to be, and he could go for these recess appointments?
I think it is a bad look, and I think it would sit uncomfortably with a lot of Republicans in the Senate. Remember, there are a lot of traditional Republicans in the Senate. This is undermining the Constitution. But it's true, with Republicans now in control of both the Senate and the House, this does give Trump sweeping authority to enact his agenda. It's obviously a slimmer majority than he had when he first got elected in 2016. But I think the difference now is that the Supreme Court has given Trump this wide-ranging immunity to be able to do whatever he wants, really. So I think it will face he will face difficulties if he tries to get his more controversial appointments through without Senate confirmation.
And then when it comes to policy, John Thune has been appointed leader of the Senate. And again, the question will be, to what extent is he a quasi-guardrail on policy? Because he's not exactly buddy-buddy, and we know that there was an intimation from Elon Musk behind Rick Scott, so it's not exactly gone according to the Mar-a-Lago House plan.
Right. Right. Trump did not want Thune. He wanted Rick Scott. I think this puts Thune in an incredibly difficult position. Does he defy Trump on some of his more controversial nominations like Gates, or do Republicans fall in line and particularly after Trump led them to this sweeping victory? I think he's going to have to pick his fights carefully. Another controversial appointment, I think, is the nomination of Pete Hegseth to lead the Defense Department. He is patently unqualified for that job. He served in a relatively junior position in the military. He was a Fox News anchor, but he's never managed people. And now you're putting this guy in charge of the largest army in the world with a multi-billion-dollar budget at a time of great uncertainty around the world, with wars raging in Ukraine and in the Middle East and China threatening Taiwan. So I think it's going to be a real test of the more traditional Republicans in the Senate. Do they defy Trump or not?
Well, it's early days, and you know what happens if you defy the leader in the Republican Party. We've seen it before. Get ready for your Twitter moment. Stephanie, thank you very much. Stephanie Baker there on the very latest political moves in Washington. Let's turn our attention to the U.S. earnings sheet. About 90% of the names of the S&P 500, they've already reported, and today we're watching Disney. The results will be out before the bell. Geetha Raghunatham joins me now. Geetha, good to see you. So when I look at Disney, we're expecting a bit of a bump in revenue, but if you break the business down for me, I mean, there's some challenges in the theme parks, but the studio, I mean, it had some good blockbuster names out there, Inside Out 2, Deadpool. So just break it down for me, sort of the bid and the offer within the Disney family.
Yeah, absolutely, Manus, and thanks for having me. So yes, you're absolutely right. There is going to be some softness at the theme park division. Now remember, this has actually turned into the bread and butter for Disney. It makes up about 50 to 60% of their entire profit pie. But yes, while you have the softness in the theme parks and potentially also at the linear TV network business, which is really industry-wide challenges, you do have bright spots in both Disney's streaming business because they're turning around a profit finally after losing billions and billions of dollars. And of course, as you mentioned, that big turnaround happening in the studio after a slew of, underperforming films. So you have the two positives with the studio and streaming, and of course the somewhat negatives with the parks and the TV network business.
Talk to me a little bit. I mean, I just looked through some of my direct debits in terms of what I'm paying for on television. I won't reveal that in public, but I've got a lot of regular debits going out from multiple options on streaming. Talk to me about Disney's streaming business.
Absolutely. So Disney's streaming business, very much part of the whole industry-wide slowdown. So we've seen a slowdown in Disney's subscriber growth as well. That said, the Disney Plus streaming business is still, a formidable business. We have almost 200 million subscribers to all of the Disney streaming services. So obviously they have scale. Now, the problem is for them has been, profitability. So they lost about $4 billion in 2022. They lost about $2.5 billion in 2023. The good news for them is this year, because they've been able to pull all these multiple cost levers, they're actually going to turn a slight profit. Mm-hmm. Now, the question for them is, are they going to be able to keep up that ramp in profitability? And I think what investors are a little bit worried about, and we'll get more answers to this on the call, is that the ramp to profitability, because we know Netflix has kind of really set the stage here with $10 billion in profit this year for their streaming service. Is Disney going to be able to achieve that same level? I think what investors are going to find is that fiscal 2025 is going to be slightly tough, but I think we're going to see a significant ramp up after that.
Okay, Geetha, let's see what the numbers are. There's a great headline here from Nelson Peltz Disney will get a respectable CEO with the former Morgan Stanley CEO, James Gorman, spearheading the search. It's all about succession. Geeta, thank you very much. Geeta Raghunathan there on the Disney trail from Bloomberg Intelligence. U.S. sports betting has only been legal outside Nevada since 2018. Now it's permitted in 38 states. And last year, the operators made nearly $11 billion in revenue. DraftKings projects it will reach $6 billion in revenue next year. My co-host, Danny Berger, spoke to the CEO, Jason Robbins, and the CFO, Alan Ellingson.
There's an inflection from when you're cash flow negative and you're operating off of equity raises from the past to when you're self-funded and you're cash flow positive and able to control your destiny a lot more. When you're cash flow negative, when you're in the early stages of being a company, you've sold a vision of what the company should be working on, and you're very focused on working on that and delivering against that. When you've pivoted to profitability, the world of what you can work on is a little bit open, and there's a lot of different ideas, and it requires more focus than ever to make sure that you are prioritizing on the most important things that are going to deliver the most value.
When you have really strong revenue growth, you don't need that. If you look at where we are today and where we want to be and where we believe we will be, the vast majority of the incremental EBITDA is not coming from any cost reduction. It's coming from increased revenue.
We don't feel like we need to cut costs because we're growing our revenue so much. We want to grow our revenue into our existing cost structure, and there's no need to reduce the cost as long as we're being efficient with what we allow our cost growth to look like.
Now, along the way, there will 100% be opportunities to drive efficiencies, and we like to think about those long term. And we're in the fortunate position where I think we don't need that necessarily to make next quarter or next year's profits. It's much more about how do we build the most efficient, scalable company long term so that we can win competitively and win with the customer.
That was the DraftKings CEO and CFO speaking to our very own Danny Berger, my co-host, and you can see the full episode of Chief Future Officer on Bloomberg.com and YouTube. Tune in. Coming up, we'll get you set up for the trading day, including more remarks from the Fed Chair Powell. Yep, the leader speaks right here on Bloomberg. Bloomberg Brief. I'm Manish Cranny here in New York. Let's set up the day ahead for you. As we've just discussed, you get Disney before the bell, plus an interview with the JPMorgan CEO, Jamie Dimon. That is at 2:30 p.m. Eastern. Fed Chair Powell speaks on the economic outlook. He's in Dallas. That is at 3 p.m. And that's going to be a real focus. You've got jobless claims as well and PPI. So again, another narrative about what feeds into the PCE. Some stocks that are moving. We talked about crypto through the morning. Coinbase, MicroStrategy, both rising as Bitcoin continues to rally. You've got Cisco. That's dropping. They gave a conservative guidance, really, on the outlook, delivering better than expected results. When it comes to these markets, it is ground zero. What happens next in this bond market? From a political point of view, you have a trifecta in Washington. Rates just look, they're flat at the moment. 445. Priya Misra with JPMorgan with me there now. She's not a believer in this 5% narrative on the upside. There will be more talk about perhaps fiscal probity rather than fiscal largesse. You saw near double-digit moves drop in yields yesterday on the back of that CPI, and the core CPI being the lowest since July. But the debate is this. The 5-year break-evens are rising. The risk is they become de-anchored, according to Tim Graf.